So what's a stock? Listen up, it's simple. You buy a stock, you own a piece of a company, a tiny slice, like a sliver of a giant pizza. You become a part owner. Yeah, you. Got it? It's not just paper, it's your stake in the business, your claim. Booyah! This is fundamental, people, so pay attention. Why do companies even offer these pieces? They need money, cold hard cash, to grow bigger, to invent new things, to crush their competition into dust. This stock sale is like rocket fuel for them. They sell you a small part, you give them capital, they use it to expand their operations. It's a transaction, a partnership. If the company does well, they chase their dreams, you get to ride along. What does this mean for you, the investor? Potential, the potential for profit. If the company succeeds, its value goes up. Your stock's price could soar. Ka-ching. That's the sound of money, folks. You might also get dividends. Think of these as little thank you payments, cash bonuses sent right to you. But hold on, it's not a guaranteed win. All right, what's a stock exchange? Picture this, it's a giant marketplace, a huge bazaar, but for stocks, this is where buyers meet sellers, millions of them. Prices wiggle up, prices jiggle down. It looks like chaos, but it's an organized system. Think of the New York Stock Exchange, the NYSE or the NASDAQ. These are the big leagues. This is where fortunes are made or lost if you're not careful. It's serious business. How do these trades actually happen? You need a broker. They're your middlemen, your gateway to the action. You tell your broker, buy this or sell that. They execute your order on the exchange. It's all electronic these days. Super fast, lightning speed, I tell you. No more guys in funny jackets yelling. Well, mostly. Computers handle the bulk of it now. Your order gets in line. Then, bam, it's done. You're in or you're out. The key driver, supply and demand. This is Economics 101, people. If more people want to buy a stock than sell it, what happens? The price goes up, skyrockets. If more people are selling than buying, the price goes down, plummets. It's that simple. Investor feelings or sentiment play a massive role. Fear and greed are powerful forces. They move markets. You got to understand this basic principle. It's the pulse of the market.
7, 6, 5, 4, 3, 2, 1.
You got to know your numbers. If you don't, you're just gambling. One key number is the PE ratio, price to earnings. Sounds fancy? It's not. It tells you how much investors are willing to pay for every single dollar the company earns. A high PE often means investors expect big growth. Maybe they're too optimistic. A low PE might signal a bargain, or it could mean the company's in the doghouse. It's a clue, not a conclusion. How do you calculate this PE thing? It's easy math. Take the current stock price, divide it by the company's earnings per share, or EPS. Stock price divided by EPS equals PE. Boom, you can find these numbers everywhere. Financial websites, brokerage platforms, they all have them. Don't be intimidated by financial data. These numbers are your friends. They whisper secrets about a company. You just need to learn their language. Practice, practice, practice. But listen, the PE ratio isn't a crystal ball. Don't rely on it alone. It has limitations. This is crucial, so listen up. Diversification, what is it? It means spreading your money around. Don't bet your entire nest egg on one stock, please, or even one single industry. If that one thing goes belly up, you're wiped out. Finished. Diversification is your financial seatbelt. It's like a farmer planting different types of crops. If the corn fails, maybe the soybeans will thrive. This is investing 101 for survival. Why is diversification so darn important? It reduces your risk dramatically. It helps smooth out the wild swings in your portfolio. Some of your investments will go up, others might go down or sideways. The goal is that they don't all tank at the exact same time. That's the magic. It helps you sleep better at night, knowing you're not totally exposed if one company hits a rough patch. Smart investors live by this rule. So how do you actually diversify? Spread your investments across different sectors. Technology, healthcare, consumer goods, energy, financials. Mix it up. Also across companies of different sizes. Large cap giants, mid cap growers, small cap dynamos. You can even diversify by geography. US stocks, international stocks. Section 5, ready to rumble. Your first steps into the market, so you're ready to jump in. Hold your horses. First, educate yourself. Read books. Lots of them. Watch financial news. Absorb information like a sponge. Understand the fundamentals before you risk a dime. Knowledge is your best weapon in this game. Don't just follow tips from your brother-in-law. Learn to think for yourself. The more you know, the fewer mistakes you'll make. This is step 0, the absolute foundation. Next, figure out your financial goals and your risk tolerance. What are you investing this money for? A down payment on a house, your kids' college, retirement in 20 years? How much money can you realistically afford to lose? Be brutally honest with yourself. This will shape every investment decision you make. Don't invest your rent money or your emergency fund. That's just asking for trouble. Plan it out. Seriously, now you need a broker. An online brokerage account is the way to go. They make it super easy to buy and sell, but do your homework. Compare the different brokers. Look at their fees. Check out their trading platforms. What research tools do they offer? Section 6, protect your neck. Smart risk management strategies. Listen, risk is part of the deal. There's no such thing as a risk-free investment. If anyone tells you that, they're selling snake oil. Run away. The stock market goes up, the stock market goes down. That's its nature. You have to accept that. Prepare for it mentally. Don't freak out when things get a little turbulent. Volatility is normal. In fact, it can create buying opportunities for the savvy investor, so don't fear it, understand it. One tool you can use is a stop-loss order. This is an order you place with your broker to sell a stock if it falls to a specific price. It's like an automatic eject button. It can help limit your potential losses on a trade. Protect your downside, but remember, it's not a perfect shield. If a stock gaps down sharply overnight, your stop loss might execute at a lower price than you wanted. Still, it's a useful defensive measure. Know it. I've said this before, and I'll shout it from the rooftops. Only invest money you can truly afford to lose. This is paramount. This is non-negotiable. Do not use your emergency savings. Do not use money you need for next month's mortgage payment. The stock market is a wealth-building tool, not a casino, but you can still lose money. Section 7. It's a marathon, not a sprint. The power of long-term thinking. The stock market is not a get-rich-quick scheme. Get that idea out of your head right now. Anyone who tells you otherwise is a charlatan. Real wealth, lasting wealth, is built over time, slowly, steadily, patiently, trying to perfectly time the market. Buying at the bottom, selling at the top is a fool's game. Most people who try it fail miserably. Don't be that person. Patience is your greatest ally here. Let time work for you. Let's talk about the magic of compounding. Reinvest those dividends you earn. Let your profits generate even more profits. It's like a snowball rolling down a hill. It starts small, but it gets bigger and bigger and bigger over time, exponentially. Albert Einstein supposedly called compounding the eighth wonder of the world, and he was a pretty smart cookie. So listen to Albert. This is how true fortunes are often built. It's powerful stuff. You have to learn to ignore the short-term noise. The market will have bad days. It will have bad weeks. It might even have a bad year or two. Don't let the daily news headlines and the talking heads scare you out of your positions. Section 8. Mid-roll madness. Time to take action, people. Okay, folks, are you feeling it? Are you fired up? You absolutely should be. We've covered a ton of ground today, from understanding what a stock actually is to how the exchanges operate like a well-oiled machine. We've demystified the PE ratio. We've hammered home the importance of diversification. You're getting smarter about money by the second, but listen, knowledge without action is like a car without gas. It ain't going anywhere. So what's your next move? It's time to get off the sidelines. Don't just sit there absorbing information like a couch potato. It's time to make something happen. Open that brokerage account we talked about. Start small, just like I said. Dip your toe in. Buy your very first share of a company you've researched, a company you believe in. Do your homework always, but don't let analysis paralysis keep you frozen. The best time to invest was yesterday. The next best time is now. Section 9, the final bell. Go get 'em, Tiger. Well, that's the final bell for this stock market boot camp. You're now armed and dangerous, with knowledge, that is. You understand what stocks are all about. You've got a handle on how to peek under the hood with things like the PE ratio. You know why diversification is your best friend and why risk management is non-negotiable. Most importantly, you get the incredible power of long-term thinking. That's a massive upgrade from where you started, right? You're ready for the next step. Investing in the stock market is a continuous journey. It's not a one-time event or a final destination. There will be thrilling highs, there will be stomach-churning lows. That's just part of the ride. The key is to keep learning, keep adapting to new information. Stay disciplined with your strategy. Don't let your emotions, fear or greed take the steering wheel. Stick to your plan. Remember your long-term goals. Your future self is depending on you. The single most important thing you can do is to get started. Seriously, even if it's with a very small amount of money. The practical experience you'll gain is invaluable, more valuable than any book. Don't be terrified of making mistakes along the way.